Welcome back to the Rogue Trader podcast with me, Nick Leeson. Today we're joined by Jason Sen, so we'll be talking markets. It's going to be a fairly short session today. I'm looking for some guidance. If nobody else is, I'm sure everybody is at the moment because gold is booming again. It's I think it's traded 36, 16, 17 this morning, so it's gone through new highs yet again. It touched 36 on Friday, easily passed through it today. And so there's a couple of things there, Jason, just I wanted to have a chat with you about. One of them we've touched on before, but I remember when I started back at Barings years ago, and you were getting up to key levels, and 36 would be a key psychological level, if not necessarily a trading level. And I was always told it won't go through the first time. It's going to take 3 or 4 times to go through. And it was you could pretty much work on that basis. And, I suppose, as we know, the markets are, they're traded by humans or extensively so years ago. And maybe we were all thinking the same way, and everybody's waiting for that 3rd or 4th time for it to go through. And I was trading Nikkei 225 back in that day. But now it slices through these levels like a knife through butter. It's just unbelievable. I'm looking at it there this morning as it's going through 36. All right, I'm thinking might be a stop or two above here. It will trigger, and then we'll slow down. But it just gathers pace, and every time it pulls back even slightly, it goes again. And I don't know if that's because there's more. There's more computer trading, algorithmic trading than there was, years ago when we're all sat around screens or in the pits and trying to do stuff. But it just seems to be a marked change, something that I'm still not getting used to because, yes, of course, I sold just above 3,600 and waiting for it to come back. And that's why I'm looking for your guidance today, I suppose. But how do you find that little part of it?
I don't know what's driving it. Well, I mean, obviously, now that we've got potentially lower interest rates, that's quite significant.
Yeah.
It just keeps going, though, Nick. As you say, I'm a trend follower, so I don't fight it. I'm actually going to go back. Just before we started recording, you were talking about how far we've got this year, weren't you?
Yeah.
So January, it looks like we were trading around 2,600, 2,650, let's call it. Wow. So we're now up $1,000.
Yeah.
Whew. That's very, very significant. I didn't even realize that myself, actually. Well, it's actually a good perspective, this weekly chart, because you can see nice run up to April. I've talked about this every time we've talked about gold. This very sort of equilateral triangle consolidation pattern, which is perfectly normal. You would expect the market to break up eventually on this consolidation pattern, the closer you get to the apex of it. So it's pretty textbook as far as technicals go. And we've just had a good run up. Not all markets break and tear up like this. I'm struggling with forex markets because they're not really doing anything. The dollar certainly isn't really very weak when you consider that we've had a weak employment number, and we're looking at significantly lower rates, or the market's expecting over the next few months now into the end of the year and beginning of next year. But gold is the one thing that really is reacting to those lower rates.
And where do you think it can get to on this? I've seen some stuff this morning. I saw a couple of contrasting bits. I mean, as I spoke to Tony Laporta the last week or the week before, and I know you know Tony as well. And there was a
smart guy.
Yeah, and he sees a correction coming in silver, and I don't want to look at silver now. I don't want to put you on the spot, but that was one of the things that he was seeing over the last number of days. But gold just seems to outpace it and move forward all of the time. But have you got a target that you're looking at in gold, just so I can get out if I need to?
Well, there's your silver chart. So maybe he's right. We're seeing some congestion around the trend line that goes back to the whole year. So I don't know whether that's Tony's logic, but certainly I can understand that. And silver didn't really pop up on Friday. It's not really tracking gold. Okay, going back to gold. All I can use is fib extensions. That's the only thing I can do now because obviously we're in new territory. So This is much longer term. I'm not talking about sort of a day trading perspective. I'm talking about an investment perspective. Maybe by the time we chat again, gold could be up at 36.90. You know, that would be the first fib extension target. It's another $70, but you know, in this market, that's not an awful lot, is it? What's that? 2%?
Yeah. Yeah, and it's moving quickly. I mean, you know, we've seen days where gold has moved $40-50 on certain days. It's just been absolutely crazy. And if you know, like I remember all those years ago when it's standing in the pit and you're trying to trigger the next stop that might be out there in the market. It certainly looks like there's a bit of that in play in the markets over the last couple of days as well. But not that we're racing away. But it's just this constant grind. Say that again?
Yeah, you're right. It's been a fairly steady climb. Look, just looking at this with the trend lines, you know, you touch the lower trend line and off you go. It's pretty consistent. Actually, this upper trend line here ties in nicely with that 36.90 target. So looking at it, wouldn't be at all surprised to see that at this rate before the end of the week.
Wow. Yeah. Okay. So I better get out of my position pretty damn quick. No pullback. You're not. It's definitely the trend that you're following. I mean, just on the subject of trends, I think sometimes it's important for me to try and explain some of the stuff that I do, just because it's a little bit more contrarian and counter trend, if you like. Although I think counter trend probably stresses it a little bit too much. But you know, I've just got a psychological barrier from being long the Nikkei 225 from a high. It's just buying new highs just isn't something that I do. It's just not in my makeup, and probably because I got burnt so badly all those years ago when I was working for Barings. So it's just, as much as it is following the trend, it's still something that I just can't do. I've got this psychological thing in my head that stops me doing that. So, but if you get the timing right, you know, and you get a slight pullback, you can still make money doing it. But yeah, the trend, certainly when we're setting new highs, isn't something for me. And it's just a psychological barrier, I think, more than anything else. So it's great to listen to you and you know, listen to the ways that I should be doing it when we're getting up at these levels. It's either that or choose a different market to trade when we're setting new highs, because I think last week I discovered an innate ability to find the market that was going to cause me most damage. I had a great day Friday, which recovered everything, but you know, earlier in the week it was, you know, the scalping or the short-term trades were working well, but then, you know, I'd put myself into a DAX position or a gold, more often than not, a gold position that was going to go against me quite significantly from that point. So you know, I was always chasing my tail. All right, look, we'll leave it there. Do you have Bitcoin quickly? Just, there was one thing that I was thinking about with Bitcoin, Jason, because you mentioned the 112 level a lot when we were breaking downwards. It did break through there. Not sure where it went to. Probably went to about 10, 108, maybe around that sort of level. But we've recovered back up to 112 just today, I think, earlier today. I just wondered where you think we're going to go from here.
I actually don't have it on this platform, but yeah, I know. I have been looking. I have been following it very closely, and we've broken out to the upside of a descending wedge pattern, which is a bullish pattern. It's a normal sort of correction pattern in a bull trend. When you break up, it's you know, the probability is that the market will then resume the bull trend. So I feel quite bullish about Bitcoin. It's taking its time actually to resume that bull trend, but I think it will happen eventually. I've probably shaken out some weak longs over the last few weeks, and now it's time to get moving.
Okay. All right. Look, we'll leave it there. Thank you very much for joining us, and we'll be speaking to you again soon, and we'll see where these markets go. And I hope gold starts to slow down a little bit, at least for today. And maybe I'll join the trend later today or tomorrow. Take care.
Actually, the fact that it's up today in you know, in a quiet market where nothing else is really going on, it just shows you that, I mean, the path of least resistance certainly seems to be up today, doesn't it?
Yeah, 100%. Thanks a lot, Jason.
Cheers, mate. Thanks, Nick.
Take care.